Good evening, everyone. I hope my voice is audible to all of you. May I get a quick confirmation over the chat box, the YouTube chat box. Um, is the voice clearly audible? Maybe not the screen, but the voice. That's great. Okay. So, welcome you all to the AAA Grand Revision. Here we are today for the uh, quick revision of all the concepts of advanced audit and assurance. Right. So before I begin with the conceptual part, I would like to discuss with you the format of the exam. So let's just have a look at the format of the exam first. So that's very important because AAA syllabus is very easy comparison to the techniques and the strategies that have to be applied for the application. So what we have in the paper is that there are 80 technical marks, right? So I'm going to get 80 marks for the just for the um, you can say subject related stuff, right? And there will be 20 professional marks, which is for professionalism, which is basically apart from the things like concepts. That's basically for what you actually, how do you present your answer? What is the logical flow of the answer? What is the content of the answer? What is the length of the answer? Have you made paragraphs, given headings or not? All of that matters, right? So that is 80 technical marks plus 20 professional marks. Now, the what are the most important areas of the syllabus? The most important areas of the syllabus, which you sure should know, is first of all the planning part of the audit. Or first you can say, for example, acceptance procedures. That how do you accept your client? What do you see before accepting a client? Then you have your planning procedures or your planning part of the audit, where you understand your client, assess the risky areas, you develop a response to that risk, and then you finally give procedures, right? Or you do procedures. So after the acceptance and planning, then we have the procedure stage where we actually do the procedures and collect evidence. So then the next stage is collecting the evidence. Then what we have is completion of the audit. Now finally we are entering into completion and review of the audit process, that how the things have been taken care of. Then finally what we have is reporting part of the audit. Once the completion and review has taken place, now we have to make an audit report and finally sign it for the shareholders and the stakeholders. Now, while doing all of this, we have to make sure that we are having a good quality audit. So quality management is a very important topic. And accordingly, we also have to see that we are maintaining the ethics while doing the process of audit. So ethical implications are equally important. Then finally, what we have is we have the other assignments, right? So other assignments are basically, for example, due diligence, fraud, all of that, right? So we have to take care of all of these things as well. This is what we have in our basic important areas of AAA that we should have short done, right? This is something that we should have short done. Now, how are we supposed to get professional marks? That's a very important question. See, while doing the practice, all this while, I have taught you how to get professional marks, how to make sure that your answer is on the right track, right? Now, in question number one, like for example, they ask you to make briefing notes. So your format of briefing note will make a difference. Then only you will get professional marks, right? And then making good paragraphs, giving headings, doing the correct analysis, thinking in a broader picture. Like you can't just think what is given to you. You can't just read the line. You have to read across the line. You have to make things one step ahead from the question, right? So that's very important, right? So that's the important area which we have primarily for AAA. Now, what is the format? That's what we were discussing. So question number one, which is going to be for 50 marks, right? Then we have the question number two, which is for 25 marks. Then we have the question number three, which is for 25 marks. Can you tell me which questions are asked in question one? Like which topic is asked in question number one? Any ideas by far? Yes. Which questions are generally asked in question number one? Business risk, ROMM, audit risk. Very right. So, risk question generally. So, we can be asked about audit risk. That's basically when we are asked about the inherent risk, detection risk, control risk, right? We can be asked about ROMM, where we are basically asked about just inherent risk and control risk. So, not the detection risk. We can be asked about business risk as well. Now, business risk is from the perspective of a CEO, not the auditor, right? Then we can be asked about giving certain procedures related to a situation or a standard. We could be asked about evidences, and there can be something about ethical implications as well. So generally, these are the topics which are tested in question number one for 50 marks. So basically, you know that for half of your paper, these are the areas which are tested. So automatically, you should know that these are very important areas of your syllabus because half of the paper is made up of them. Now, if we talk about question number two, which is for 25 marks, generally they ask you a requirement where they talk about matters to be considered in a question. So, in your Super 20 questions, I gave you a lot of questions which were related to matters to be considered. Now, matters to consider basically, we talk about materiality of the matter, we talk about the treatment, accounting treatment of that matter, and we talk about its impact like what is the impact on the financial statement and what is the impact on the audit report if that misstatement is uncorrected. So we talk about matters to be considered with a relation to some kind of standard which is applicable in the case study. With this, you can be asked about again evidence, okay, generally evidence, not procedure. Procedure they ask in question number one, and this can be combined with quality management again. So this is generally what they ask in question number two. Now, question number three, they ask from reporting, review and reporting. Okay, so they can give you audit report that you have to critically appraise. So that can be review and reporting. And they can combine this with one of the other assignments. And they can also ask you stuff related to some current issue. For example, there are latest, for example, the latest current issue is sustainability. And then there's one latest technical article on less complex entities. We'll discuss all of that today. So that can be asked in question number three as a like a theory question. I wouldn't say that it will be an application based question, but a theory question, right? This is what is asked in question 1, 2, and 3 generally. Now, how do I get those 20 professional marks? How to get those 20 professional marks? Because everyone is writing best answers as per their capacity, but still one person is getting 49 and other is getting 50. So the one who's getting 49, clearly the examiner had an option. When you're giving 20 professional marks on the basis of judgment, or it's there in the hands of the examiner, so he had an option to give you one extra mark and give you a pass. Why did he not give you a pass? Why did he give you 49 when he had 20 marks in his hands? See, examiner sees few things. For example, you should use professional words. So when you're answering your question, you can't be generic. You can't be explaining things in simple language. However, simple language can sometimes feel very, you know, you can say it might feel very lucrative to you that we can write it in our own sense, but still, examiner loves professional language, technical language, where you're referring to ISAs, you're referring to keywords from the ISA, or the information from the standard is as it is stated. So use of professional words. Then do not repeat. Now, for example, um, in the case study, they have asked you that generally what they say is that you receive an email from your senior. In the email, the senior has asked you that assess risks for me, and he has given his meeting notes to you. Now, generally in SBR, we used to give background, like what we read in the case study. We copied, pasted it, and we gave a background that because this has happened, this is the implication. Now, in AAA, the examiner does not want you to repeat. So it's like you have to live the case study. They are saying you've received this email from your senior. So the information which senior has given you, of course, he already knows it, no? Why are you re-explaining that because this happened, this is the implication? Just talk about the implication. Don't spend too much time on giving wide backgrounds. Do not repeat your points. If you have put something in audit risk, don't put it in business risk. You can change the context and put it, but sometimes people they put it in the same context only. So do not repeat your points. Try to make them as unique as possible. Have a logical flow in your answer. So you should have a good flow because you're writing an email, right? So, for example, in a case study, there is something related to inventories. And the briefing notes, you are supposed to talk about inventories, procedures, and inventories business, audit risk. So, first you type inventories audit risk, then 10 paragraphs later, you talk about their procedures. So, that is something which they say this is not a logical flow. If you can make one heading of inventories, within that you can write its risk and procedure, unless it is a different requirement. So you have to make sure that you try to make it as composed as possible, as less cluttered as possible, and have a good logical flow, right? So logical flow also means that you're not supposed to move chronologically. You are supposed to connect the dots. So you have to read the full case study before you start answering the case study. You can't just go by, okay, I read this first, so let me explain that first. That is not a logical flow. Logical flow can only be developed if you have read the full case study. Then what we have is evaluation skill. We are supposed to apply the evaluation skill. Now, that is basically that we have to have a 360-degree approach. Now, what does that mean? I am not supposed to think about, for example, there's a control risk that the CCTV is not working. So I will say, okay, this is a control risk. So that means the inventory could have been stolen. But this is just one side of the story. You can think ahead that why is CCTV not working? Is there someone who has purposely put this CCTV on off and is conducting a fraud? And not just this, because CCTV is not working, not just inventory can be stolen, there can be a lot of other assets which can be misappropriated. And there are possibilities of fraud because the employees would know that the CCTV is not working. So they can take advantage of that situation. So we have to think with a 360-degree approach. We have to think with a questioning mind. That's when you get those 20 professional marks, right? So this is what the skills that we have to apply. We have to apply commercial acumen. So commercial acumen is basically when you talk about the cost benefit analysis. So if you say I will do so many things in this process of audit, do you think it's worth it? Do you think this will give you that much benefit or not? You have to consider that. So having a commercial acumen is also very important, right? So this is what we have in the 20 professional marks. Now we will start with certain basic theory questions, like we will make our notes on basic theory questions, and then we are going to move ahead with um, two important technical articles, one on sustainable reporting and one on the less complex entities. So let's get started and answer some basic questions. Like, for example, they can ask you a basic theory question, that what is professional skepticism? What is professional skepticism? So throughout the process of audit, guys, we have to apply skepticism, which is a attitude of having a questioning mind. So it is an attitude. It is not something like an activity or something. It is an attitude of having a questioning mind. And when you have this questioning mind, what does it help you for? It helps you to find contradictory evidences. Okay, so it helps you to analyze the contradictory evidences that you might have received. So in the process of audit, one evidence can suggest something and other evidence can suggest something. So these could be contradictory, which you have to like, investigate that why the information that I'm getting from two sources is different. Then we have to have a questioning mind for identification of a possible fraud. Then we are supposed to have a questioning mind to identify material misstatement. So to identify risky areas, to identify material misstatements, I am supposed to have a professional skepticism. Then this professional skepticism is my weapon, which I'm going to use against possible frauds and errors, right? So this is my weapon as an auditor, that I am having a questioning mind and I will question everything that comes in front of me. That's how I can find mistakes in the financial statement. Because at the end of the day, as an auditor, you're supposed to see whether the financial statements are true and fair or not, right? That's what your ultimate intention is. So now, to make sure that you are able to find it, you should have some kind of an attitude, and that attitude is of a professional skepticism, right? Now, if they ask you a direct question, you have good content with you, that okay, what is professional skepticism and how it can be used. Now they can ask you on the basis of application. Like for example, they can say in this particular question, use skepticism. So here you have to again think 360-degree. When I say you have to keep a 360-degree approach, that is basically professional skepticism. When you have to question everything, that why this happened, you are like very doubtful. You're just questioning everything. If someone gives you some statement, you over analyze that statement. So that application can be done in the case study as well, right? Then question number 2, uh, after skepticism, what we have is we have different ethics which are applicable in the whole process of audit. So let us understand question number 2. Principles. What are the principles of ethics? Principle of ethics which an auditor should follow, which an auditor should follow in the audit process. So what are the principles of ethics which the auditor should follow? You have PICOP. So what do you mean by PICOP? Where P stands for professional behavior. So professional behavior is basically that you're not bringing disrepute to the profession. Then you have integrity. So integrity is basically when you're straightforward and honest. Confidentiality. So confidentiality is that I will not leak the sensitive information that I've received through my business relationship to anyone without prior permission unless required by law or in public interest. So confidentiality is that you will not leak sensitive information which you have acquired in a business relationship okay, in a business relationship until until the permission is taken, or it is required by law or in public interest, right? This is what I have to consider before I actually leak out the or think to leak out the information. Then you have objectivity. Objectivity means that you are being unbiased, okay? So you're being very objective, you're being fair. Then you have professional competence and due care. So as an auditor, you should have professional competence. That means you should have requisite knowledge, training, and experience. So in a given case, when you're supposed to apply judgment, you're supposed to make assumptions, you should have the previous knowledge, training, and experience in that particular sector. So, for example, let's suppose that you are doing audit of financial instruments, and now you don't have any, prerequisite knowledge about that area. Then how will you manage it? You don't know what are financial instruments. You've never done its accounting. So how will you be able to audit the accounting of financial instruments? Because it's an inherently risky area. So we should have professional knowledge, competence, and due care while doing the process of audit, right? Then, how are we supposed to answer the ethical questions in the AAA paper? So the next question is how to answer ethical implications, how to answer ethical scenarios or ethical questions in exam. So if something comes up from ethics, how are we supposed to deal with it? See, first we have to talk about the threat which we are facing in that case. So we have to talk about the threat to ethics. What are the various threats to ethics? First, we have self-interest threat, where we, due to our own financial interest, we end up compromising our integrity and objectivity. For example, you're receiving some gifts and hospitality, you have your own shares in the client. All of that is example of self-interest threat. Then you have like the self-review threat, when you check your own work, so you are very reluctant to find your own mistakes. So it's like I ask you that you check your own mock. So you will be very reluctant to find your own mistakes. You'll always feel whatever I've written is correct, right? Then we have the advocacy threat, where the auditor can at the end of the day become promoter of the client. For example, the auditor accompanies the client to the bank meeting for taking a loan. So there you are promoting your client's interest. It's not your interest that the client should get the loan, but it's just purely the client's interest. And you are accompanying the client, you are pitching his idea to the bank. So you're basically advocating your client. So that's an advocacy threat. That means you're not independent as a professional, right? Then we have the familiarity threat. So familiarity threat is, for example, you should not be there with the one client for more than like 7 years, right? And you should be having a rotation, and this will create lots of personal relationships with the client, because if you work with them for so long, and otherwise if someone who's closely related to you is your client, then also there's familiarity threat, because you might end up becoming too sweet to them. So therefore that's incorrect. Then we have intimidation threat. So if the auditor is facing, due to any reason, pressure which is actual or perceived, so in reality if the client is putting the pressure that complete this task by this day, or get the audit done faster, or give me this kind of an audit report, or else I'll not work with you, or I'll not sign the next year's contract with you. So all of that is intimidation. Because of intimidation, you can end up becoming very demotivated to work. You can end up compromising your independence, your objectivity, and you will act as per what client wants from you, right? Then lastly, we have management threat. Now management threat is when the client asks you to do something related to other than audit. For example, they can ask you to develop internal controls. So in that case, as an auditor, you might become too involved in the work and you get into the shoes of the management. So that is basically getting into shoes of management. So if that happens, it's very difficult to reduce this threat to an acceptably lower level, right? So management threat is when you end up taking the responsibilities of the management. Now, how to answer the questions in the exam? First, you have to identify the threat to the ethics. Second is, after identification of the threat, I have to tell that why is it a threat? Why do I think that this particular threat exists or this is a threat? Then I have to talk about the significance of the threat. So basically, if the company is listed, then the threat significance increases. If the threat is faced by an audit senior, it is high. If the threat is faced by engagement partner, it is higher. But if the threat is faced by an audit junior, I can still ignore it. So I have to analyze the significance of the threat. And finally, I have to give safeguards as per which I can reduce the threat to an acceptably lower level. So this is how I actually answer the ethical questions in the exam, where we have threat to ethics, and then we talk about why is it a threat, and then we talk about how we can, you know, yeah, how we can reduce this threat to an acceptably lower level. Are we clear on this? How to answer the ethical questions in the exam? All set? Are we all clear on this? Okay, let's move on. What are some important scenarios? Let's understand some important scenarios which are very commonly seen in the exam related to ethics. Some important, or you can say commonly or frequently asked scenarios. Number one, when there is gifts and hospitality. Gifts and hospitality. So what happens? This is where this gives rise to self-interest threat. So here what I'm supposed to see is that why auditor is receiving the gift and hospitality. So I have to see the nature of the gift, value of the gift, and intent of the gift. If I see that this is trivial, okay, if I assume or if I get to know that it is trivial, that means it's not so worthful or it's not so worthy or it's not with that intention, I might end up accepting it. That's okay. But if it is not trivial, then I have to politely decline that gift because this gives rise to self-interest threat. Then, for example, there is a situation where uh, you're compensated on the basis of non-audit services. So sometimes, auditors, they also provide non-audit services. So you are like giving non-audit service, and client says that how much development you make in those non-audit services, on the basis of that we'll pay you the audit fee. So contingent compensation. So in that case, see, this is not allowed because again, this gives rise to self-interest threat. So this is giving rise to self-interest threat. And as per the code of ethics, this is prohibited. So you should not get into a setup where our audit fee is based on certain factors because this will give rise to self-interest threat. Then there's a point of fee dependence as well. So what does this point say? That if from one single client you have a lot of fee dependence, if that is your major client, then you will become too bending to the needs of that client. You'll feel like, I don't want to offend this client. I want this client to stay with me forever because this client is very important. My house is running because of this client. So fee dependence, if for more than 2 consecutive years, the fee from one client, fee from one client is 15% or more, of total revenue, of audit firm. So what you receive from that particular client is 15% or more of the total revenue of the audit firm. Then this gives rise to self-interest threat as well as intimidation threat. And in that case, I should decrease my dependence on the client. How can I reduce the dependence on the client? Either I can stop providing him some non-audit service, stop providing some service, or I can reduce the fee, etc. So I have to do something due to which my dependence on the client will reduce. Then only I can continue with that client, right? Then we have some overdue fees. Sometimes, the client has not yet paid the fees and you start with the next year's audit. Now, this is like giving rise to a self-interest threat because it's like you've given loan to the client. So you are very conscious that I don't want to offend this client, otherwise they will not pay my money back to me. So this gives rise to self-interest threat. Also, it gives rise to intimidation threat, right? Why intimidation threat? Because you have overdue fees. So overdue fees means that the client can say, okay, if you don't do this, I will not pay you the fee that is pending. So you feel little intimidated, right? In both these situations, you should not go ahead with next year's audit until you clear the dues. So clear the dues or make a plan of payment, get a plan of payment, and then continue with the client. Otherwise, reject the client. So you'll not provide the next year service until the last year's dues are cleared or a payment plan has been agreed to, right? Then lastly, we have non-audit services. What happens in non-audit services? See, there are certain non-audit services which are provided. For example, you can provide accounting service, bookkeeping service, taxation service, valuation service, advisory service, so internal control related service. So in addition to audit, you can provide these services as well. But does the code allow you to do so? What does the code allow you to do so? No, the court does not allow you to do so. They say there are two types of entities. One is listed entity, another is non-listed entity. So for listed entity, it is very simple that I cannot provide, no service can be provided which is related to financial statements. So you cannot provide bookkeeping service. It's directly related to financial statements. You cannot provide, of course, the accounting services. You cannot provide the calculation of tax service because tax expenses taken to the P&L. You cannot provide the service related to internal controls, related to financial reporting process. So all of these services are strictly prohibited. So you can only provide services like advisory. You can only provide services like filing the tax return, but not calculating. So that is the code saying for the listed companies. For non-listed companies, you can provide any non-audit services, but with safeguards. So you can provide any service, but with safeguard. So these are certain basic scenarios which we generally see in the question of AAA, where they talk about ethics. I hope we are clear on this. Yes, are we all clear till here? All sorted till here? Just keep dropping a yes or a thumbs up so that no, you guys are listening and on track with whatever I'm speaking. Okay, let's move on then. Next, what we have is money laundering process and then anti-money laundering program. Now, this is a direct question again. Today, we are discussing mostly the direct theory topics because application can be done with questions only, which we have already done in the Super 20 sessions. So let us see and discuss about money laundering. This is the next question, which is question number 4. What is money laundering? See, money laundering is a process where you convert the dirty money into a clean money. So it's basically process of concealing the true origin of illicit funds. Illicit means illegal funds by placing it with by placing it into the legal environment, placing it into legal environment and layering it with a lot of transfers, with a lot of transfers, so that finally its true origin can be can become untraceable, so that its true origin can become untraceable. What are the steps involved in money laundering? Placement, where you first place the illegal money with some till receipts. For example, if you have a cash intensive business, so cash is kept in your drawer. You place where you sell your goods and services, you place illegal cash there along with your receipts. So that is placement. Then layering, when you make a lot of transfers, like from one bank to another, from one country to another, you're trying to layer that money. Then finally, integration. You might buy some luxury assets, you might buy luxury car, luxury property to actually hide that money or invest into some legal uh, asset, right? So that is integration. There are various indicators of money laundering. So generally, the indicators of money laundering is, for example, if you have a cash intensive business, so generally you're in a radar if you have cash intensive business. If you have unusual high transactions, so a lot of money is coming into the account or going out of the account, that is unusually high a value transaction. Then there are small transfers to various accounts, right? Sometimes if you talk about certain small businesses, they would do a lot of transfers showing that these are our employees and we are paying salaries, all of that. So small transfers to various accounts is another indicator. Then if you have a overseas bank account, right? So if you have a bank account in some country, or for example a tax haven country, so that can also be one of the indicators. And if you have tax haven, you keep going into tax haven countries, and maybe you have genuinely you're going there, or you can be involved into money laundering. I don't know if you've heard about this or not, but a lot of people, they have cash in India or in their respective country, and they would then transfer the cash to other countries through illegal means, right? So this is something which the money laundering act fears, and they actually point out that if you have a lot of cash, then maybe you can trouble the government with this process of money laundering. Now, what is the ACCA's guidance against money laundering? So, how will you be able to find, or you be able to avoid money laundering? Because money laundering is a crime. Not just the person who does money laundering, but the person who knows that this money laundering is happening and keeps quiet, or the person who is involved through any transaction with that person also becomes indirectly involved in the crime. So, what is ACCA's guidance against money laundering? What is ACCA's guidance against money laundering? First of all, you should have an MLRO. So, MLRO means this is a senior appointed person who is basically responsible to make reports of suspicion, to send it to enforcement agency, who's going to analyze that what is the suspicious transaction that has happened, who's the suspect. They'll make the report and analyze if this is money laundering or not. Second is that we should do proper KYC. So when we take any client on board as a business, not just auditors, but as any business, whenever we take our clients on board, we have to do their background check. We have to see who owns the company, from where the funds are raised, from where the money is flowing into the company. Is that legal means or not? So you have to do KYC. Then we have to do enhanced record keeping, because there is a possibility, that you are getting sued by the client at a later stage, that you didn't do the audit properly, or a client can be caught at a later stage that he was involved in money laundering. Then you as the auditor will also be called to the court of law, and they would ask you that, okay, why didn't you encounter this problem, or why did you not investigate into this? They will also doubt you that you are involved in money laundering. So for that, I should keep the record of my client for a longer duration, for like more than 5 years. Then there should be communication and training. That basically means that I should train my employees that how they are supposed to report the suspicions to MLRO, from grassroots level to the mid level management and top level management. Everyone should know that if there's a suspicion of money laundering, what are they supposed to do? They are not required to tip off. They cannot go and tell the suspect only that we doubt the suspect, right? So this training has to be given to the employees. And then we should have policies and procedures to identify if there's any or in to see if there's any money laundering happening. And then we should finally have monitoring process to see that all the above steps are working correctly or not. So this is what we should do against money laundering, right? So I hope we all are clear on this one. So this is again something like a 6 marker question which can be asked you directly, that what is money laundering and what is anti-money laundering program by ACCA. Then what next? Again, an 8 marker direct question that can be asked. Question number 5. This is on ISQM1. So what is ISQM1? Which is the most important topic of quality management. See, when we are doing quality management, whenever we are doing audit, we are supposed to maintain the quality of audit. So auditor has to maintain the quality of audit. But audit is something which is based on judgment, right? It is based on assumptions, it is based on judgment. So now there are certain set quality management procedures. So there are certain SOQMs, standard set on quality management procedures, which every company or every audit firm should follow. The first one is, there are 8, so I'll discuss all of them, right? So you'll have some content for 8 direct theory mark question. First is firm's risk assessment process. Firm's risk assessment process. So what's there within this risk assessment process? See, every firm must design and implement a process to identify the risk. That, for example, if you're taking a client on board, do you have that much, knowledge that you can cater to that client? So we should consider our own company's size, environment, specific situation. So there should be a risk assessment process. Every firm should have this risk assessment process before accepting a client. So there should be a risk assessment process before acceptance of client. So auditor should also have a risk assessment process where they see their own size of the company, environment, our own knowledge, training, and experience. Do we want to do work of this client or not? Do we have knowledge of this client or not? Right? So this is what we have to discuss. Then what we have is second component of quality management. Second component of quality management is governance and leadership. Now, what does this mean? See, when you enter into any audit firm, if the audit engagement partner who is at the top of the hierarchy, if that person says that what matters the most to me is that we make a lot of money, we sell as many services to our clients as possible, then every person in the team, whether it's audit junior, senior, or even the trainee, they will have the same attitude or the same outlook. But if the senior or the topmost level of the audit firm, they make it straight and simple for the whole company in letter and in spirit, that what matters to us is quality, what matters to us is ethics. We don't care even if we offend our client. If the whole team is aware about it, it will lead to a good quality audit. So, governance and leadership means the CEOs of the audit firm, the CEOs, the chairman, uh, the CEOs, the chairman, or the top management, they are able to give focus on quality. So they should give firm wide focus on quality. So they should spread this message of quality audit rather than more money. So they should not do not focus on profits and client pleasing, but more on quality and ethics. Quality and ethics, so that the same thing passes on to the rest of the hierarchy. So it's like culture of the company. So if this happens, then the audit team can confidently challenge the client's judgment. Because a lot of times in the process of audit, the audit team is supposed to challenge the client's judgment or the client's decision. But if we are like a little afraid about the client that we might offend them, we might, just bend to their needs or nod our head to their mistakes. But that's not right. So we should have that kind of a setup in the company where our leaders say that, face the client boldly. We don't care even if we lose one client, but we don't want to compromise you on your objectivity, integrity, and ethics. So that's governance and leadership. Third is relevant ethical implications or relevant ethical requirements. So all the persons in the audit team, they should follow their relevant ethics, right? That's what this point says. Then acceptance and continuance of client relation. So we should keep on you know we should keep on like thinking that whether we want to continue with the client or not, whether we want to accept the client or not. So we have to uh, take good care of our clients ethics as well. So we have to keep on looking at acceptance procedures. So we have to assess integrity and ethical values of the client and its management. If we feel they are fraudsters, we should leave them. We should be able to perform the engagement. So no, you before you accept the client, you should be able to judge yourself also. Do you have the experience in the industry your client is placed? Then we should see that are we able to understand the compliance of the client or not. So we should basically do acceptance procedures and continuance procedure. Then we have engagement performance. Once we have taken the client on board, now our performance should be really good. Whatever work we are doing, whether it's planning stage, whether it's the procedure stage, evidence stage, completion stage, we should do everything properly. Now, what do you mean by properly? There should be, in a good audit, there is always a direction of audit. So there is direction comes from planning. So for example, in a question of AAA, they say that there was no planning meeting held. So you will say planning meeting makes us realize the direction of the audit. It helps us to segregate the duties between various audit team members. And if the planning meeting was not held, then that means that the audit lacks good direction. So it's aimless, it is directionless. That means it's bad quality audit. So direction is very important for a good audit process. Secondly, what is important is supervision at all times. So there should be someone to check the work of the other party. So audit junior's work should be checked by the audit senior's work should be checked by the engagement partner, engagement partner's work can be checked by the quality control reviewer. So there should be supervision at all stages, right? Then we have consultation. So wherever required, if we don't have that information with us in our head or through our judgment, we should get someone into the picture and consult from them. So that can be an auditor's expert as well, right? So we should do consultation whenever necessary. Then there should be, like, resolution of disputes. So whenever a dispute arises, you should be able to resolve the dispute. That's when you are doing good quality audit. So these are the stuff which should be met in the engagement performance. Then finally, it's human resources. So when you're planning the audit or any work of any company, you should have enough team members or human resources to meet the needs of the client. So you should have apt personnel, and not just number, but also apt level of personnel. So for a senior work, there should be a senior person. So work related to maybe stuff like inventory, a junior can do it. But if it is related to financial instruments, I need a senior. So as per the work, there should be apt level of human resource. Then communication and information. So at all times, there should be good communication within the team, from every level. So there should be good communication. And finally, we should keep on monitoring the above stated quality management processes. So these are the 8 elements of ISQM1 which ensure that the firm is doing a good quality audit. You can be asked this directly in theory, or you can be asked its application as per the quality management rules, where you tell them whether it is good quality audit, bad quality audit, with the reason that why do you think it is good and why do you think it is bad, right? So this is what we have here uh, for our ISQM1. Now, next we are going to start with NoCar, fraud, and the risky areas. And for that, we'll just take a short break, okay, before we resume, so that you're able to digest all the things in one go. So we have done very important areas of direct theory questions, ranging from our ethics to our money laundering to our ISQM1. So these are very important areas of our direct theory questions. So let's take a short break of around 10 minutes and then get back to our next theory topic. So let's take a short break of 10 minutes. And if you want, you can have a cup of coffee by far, or maybe a glass of water. So this is going to be our break time. Yes, guys, let's continue with our session. I hope I'm audible to you. Just give me a quick confirmation. So let's continue with the session now. And okay, so the next topic which we have on our plate is NoClar and the fraud, which again is a direct theory question that can be asked. So let's have a look at it. Okay. So let's first talk about NoClar, that is non-compliance with laws and regulation. So non-compliance with laws and regulations, what rules do you have? Let's have a look. Who's basically responsible for NoClar? So question number 6, auditor's responsibility. Auditor's responsibility for NoClar, or you can say non-compliance with laws and regulation. Non-compliance with laws and regulation. What is auditor's responsibility for that? So, see, non-compliance with laws and regulation. The first responsibility for compliance lies with the management, right? So, management has the primary responsibility. Okay, the management has the primary responsibility for compliance with laws and regulations, right? With laws and regulations, management has the primary responsibility. Now, what is the responsibility of the auditor? See, auditor is also responsible, na, that he is supposed to check that which are the laws and regulations which impact the financial statement. So when auditor is understanding the client, when he's going through ISA 315 and he's understanding the client, he should understand those laws and regulations also, which are related to financial statement or which can impact the financial statement. He should see if there's any health and safety regulation. He should see if there's any compliance related to financial statements. He should understand all those laws and regulation. Now, if there is, if the NOCLAR is identified, okay, if you actually identify a NOCLAR or you suspect a NOCLAR, so if it is actually identified or suspected, then only the auditor will become active and he will actually start gathering evidence around it. So then he will start gathering evidence around it if there is any identification or suspicion of the NOCLAR. Now, you are supposed to, gather evidence regarding what? You have to see what was the nature of non-compliance and what was the circumstance. That under which circumstance this NOCLAR happened. Was it intentional, unintentional, you were ignorant? So what were the reason that there was a non-compliance with laws and regulation? You have to check that. Then we have to, report this NOCLAR to TCWG. So in our report or in our communication with TCWG, we'll tell them this is the NOCLAR that we have noticed that you should understand. And then we can take a legal advice that should we report this to third party. See, first we report to TCWG and we ask them to amend it or we ask them to comply with the law and the regulation. But if the TCWG also ends up saying that no, we will not comply with this law and regulation, or they do not amend their mistake, then we have to report it to the you know agency, government agency, and for that we can take a legal advice. Now, the laws and regulations which directly impact the financial statements, for them, even if they have not identified or suspected an OCLAR, the auditor should gather sufficient and appropriate audit evidence that they are complied with. So if there is any law and regulation which directly impacts the financial statement, the auditor is supposed to gather sufficient and appropriate audit evidence with regards to it, irrespective of whether he suspects that there is a non-compliance. right? The ones which indirectly impacts the financial statement, for them the auditor is just supposed to maintain professional skepticism. That's what he can do, right? He cannot always be on his toes to know that whether a law or regulation was non-complied or not complied. So he can just maintain his skepticism with regards to non-compliance. That's what can we expect the auditor to do. Then this is about NoCar. This is the information which can be asked for 5 marks, that who's the responsible party for non-compliance. And using these keywords and understanding, you can develop a small paragraph. Then we have question number 6, that who's responsible for fraud. So in a company, fraud happens. Like, what is the auditor's responsibility for fraud? Now see, auditor is someone who is there to check whether there is any material misstatement in the financial statement due to error or fraud. But the primary person responsible is management. Management should have such controls so that they can prevent or detect fraud. Right? So let's understand. There are two types of frauds basically. One is window dressing, which is basically earnings management, where you try to inflate certain figures. Second is misappropriation of assets. Misappropriation of asset, right? So that is the two types of frauds. Misappropriation basically means that you started using company's asset for your own use, or you have stolen something out of the company's treasury. Now, who's responsible for the fraud? That's the question. Number one, management has the primary responsibility. Management has the primary responsibility. Okay, management has the primary responsibility uh, of prevention and detection of fraud. So management has the primary responsibility of prevention and detection of fraud. Now, auditor in all good, the auditor in all good circumstances might not be able to detect the fraud, even if the auditor works in the most perfect way, in the most perfect way, because nature of fraud is such that the preparator of fraud wants to conceal it. So what do I mean by this now? See, fraud is something which the fraudster wants to hide. So if there is a murderer, he's conducted murder, he would always do so many things to hide his crime. He would not let anyone catch him or her easily, right? Now the auditor comes into the picture. Now the auditor, uh, even if he works in a perfect way, might not be able to detect fraud, right? So you can't lay this burden on auditor, the person who's just come 2 3 months ago into the company, to find the frauds happening in the company, because it's first of all management's duty. Management is working there, is doing, having controls there. So why should the newly person who's introduced, the auditor, should have that responsibility? So the auditor, even if he works to his best possible capacity, might not be able to find fraud. Then, even if the auditor tries to gather evidence, so the auditor uh, might collect evidence regarding any suspected fraud, but that would be just persuasive. So it will just tell you for example, if you have watched any mystery or a crime related series on Netflix or so, you would know that, okay, you don't get anything conclusive till the end. That, okay, this one is the suspect, this one is the actual person who's conducted the crime. We don't get to know it till the end. So the auditor will only get a persuasive kind of, you can say, evidence, something which is suggestive but not conclusive. So auditor might collect evidence, but that would be just persuasive and not conclusive. So it's very difficult for the auditor to know that if the fraud has actually happened, and if yes, who has conducted the fraud, right? So then further, auditor, uses sampling. When auditor uses sampling for methods for auditing, he might neglect certain transactions or events, which might go unnoticed by the auditor, because then he can, neglect certain fraud areas. That is natural, not by choice, but it can happen naturally. Then uh, the auditor can only do one thing regarding fraud, that he can be professionally skeptical. So only one thing which auditor can do is that he can be professionally skeptical, and if he finds any contradictory evidence, he can actually question it, or he can actually uh, get into the whys of it, that why this way it has happened. That's what he can do up to the maximum capacity. Then the auditor is just responsible to auditor is just responsible, however, to find or to identify a risk of material statement due to fraud, right? That's what he's responsible for. So if auditor has lacked his duty of care, so if auditor has lacked his duty of care, has lacked his duty of care to perform substantive procedures to perform substantive procedures on a risky area, on a risky area, then yes, up to some extent, up to some extent, auditor can be held responsible for fraud, for that fraud. See, if the fraud is related to financial statements, for example, earnings management, an auditor, because he was negligent or if he didn't do the quality audit, and it's proved that yes, his quality of audit was not good, then only we can say that it is auditor's fault and we can hold the auditor accountable. Otherwise, auditor does not have directly any duty towards fraud, right? So that's what we have to understand here. Now, finally, as we were talking about the fact in the last point that he can be held responsible. So that is basically what we call as professional liability. So if someone sues the auditor, auditor can be held responsible. So he can end up having a professional liability. So how can you limit your liability, right? Professional liability is generally uh, arises when there is a duty of care. So when will professional liability arise? Only if duty of care exists. Okay, so only if duty of care exists, that has to be there. Then only you will say that yes, this is something that we are afraid of. So if duty of care exists, then there was breach of duty of care. There should have been breach of duty of care, right? If the duty of care exists, then there is breach of duty of care, and because of breach of duty of care, there was a financial loss which was also quantified. So you could have quantified that loss as well, right? So because of this breach of duty of care, there was some financial loss that happened which was quantified. Then only professional liability will exist. And how can you limit this professional liability? So how to limit the professional liability? What are the ways? This can be a direct question again. Ways of limiting the professional liability. First of all, don't accept such clients whom do you think can be involved in fraud. So acceptance procedures. Don't accept such clients who can be involved in money laundering. Documentation. Always keep proper documentation of the work that you perform on a client, so that in future nobody can put allegations on you that your quality of work was less. Then, you should have in your auditor report a disclaimer of liability, that I will just only be responsible as auditor up to this multiple of my audit fee, maybe two times my audit fee. So just because I have signed an audit report, you can't take my personal properties and my personal businesses. I will be just liable to the extent of twice my audit fee or thrice my audit fee, not more than that. So you have to put a disclaimer of liability paragraph. Then we have to cap the financial loss, as I just said. You can cap the financial loss, that this is the amount that you will pay, right? Then you can make a limited liability partnership, because if you are a normal partnership, then the auditor's personal assets are also in danger. The court can say pay the money or the fine out of your personal asset. But if there is a limited liability partnership, then you as a person versus your firm are two different entities. So that is going to be a good point for you. Then in the engagement letter also always mention that our audit report is not meant for all the stakeholders. So you can specify that which people or what persons can actually sue us after reading our audit report, or which people are we addressing in our audit report. So that can be written in the engagement letter itself. So these are the ways you limit the professional liability, which can again be asked as a direct question, right? Now, guys, we are entering into the application part. These are basic theory topics of AAA. We have done many theory topics till by far. Um, like when you actually start the audit process. So what we have basically in question number one is business risk, ROMM, audit risk, right? So I cannot teach you risk questions because that's not something which is theory. That's basically pure mere application, right? So I can just tell you the technique that in question number one, how can you write business risk answers? So this is question number 8 that we are discussing. How to write good business risk answers. How to write good business risk answers. That's the question. See, from the business risk, we have to understand that we are from CEO perspective. We have to write it from CEO perspective, not auditor perspective. We are not talking about what's going wrong in the financial statements. We are talking about what's going wrong with the business. We might be facing some kind of threats to the business, cash flow problems, going concern problems. There can be so many things. So we have to talk from business risk perspective, CEO perspective, right? So there can be competition, there can be substitute, loss of customer, loss of revenue, going concern problems. If there's a, for example, if they say that we are entering into a new market, your next overthinking should be what if that we fail in by entering into that new market. So we might incur some cost, cash drain, all of that, right? Then significant expense, let's suppose they're saying that we are spending on advertisement, so we can say that this will it become desired, will it give us desired results? If not, then there will be cash drain. So we have to think, overthink, and think that there will be negative outcomes and what it can lead to. So we have to basically think from CEO perspective, overthink on certain things and think negatively here, and be as negative as possible that what can happen to the business if this thing goes wrong. That is business risk, right? Then how to answer your audit risk or ROMM question? You all know the technique, MTR. How to answer ROMM slash audit risk questions. How do you answer them? See, you will first talk about the materiality. So materiality basically is already given to you in the question, that base your materiality on profit before tax, let's suppose. So you will first comment whether you're keeping the materiality on the lower side or the higher side. Now, how do you decide whether it is going on the lower side or the higher side? That's basically dependent on stuff like, you know, it is dependent on stuff like whether the company is high risk company, if it is a new audit client, if it is, there's some expansion that has happened during the year, if there's a acquisition that has happened during the year. So we consider all those things, and based on that we decide what is going to be our materiality level. Then we talk about treatment. Once the materiality is set, if we are talking about a certain risk, we refer to the relevant IFRS and we talk about the accounting treatment. So here you have to mention the IFRS as it is, the standard knowledge as it is. Then we say, what is the risk here? So let's suppose the topic is IFRS 9. There was a debt instrument. So first we talk about its materiality to us. Then we talk about its subsequent treatment under IFRS 9. And then we say the risk is that maybe we have not chosen the correct subsequent treatment. So our presentation is wrong. Our classification is wrong. So that's our risk. That's how we conclude our audit risk question, right? Then comes the question of procedures, that how are we supposed to write good procedures. So many people, they are not aware about the technique or the skill to write procedures. What are procedures? The work that the auditor conducts on the financial statements. See, auditor first finds what are the risky areas of the financial statements and then he conducts work on it. So he is doing some verb, right? So why he is doing that work on the financial statements? Because he's checking certain assertions. Assertions are basically promises made by the management. What are assertions? Promises made by the management. Now, auditor is checking that whether these promises are true or not. So, with regards to statement of profit and loss, the management has made promises of OC, OCCC, CAP, AP. This is the promise made by the management, where O stands for occurrence, which means the management says whatever is there in the P&L, that income or expense has actually occurred. It's not fake. Second promise which management makes is that they have classified that expense or income correctly. They have put its correct cutoff, right? That means it's recorded in the correct accounting year. And all the income and expenses are complete. These are the promises made by the management. They also say that they are accurate, the accuracy. And their presentation is also correct. So they have put it in the right statement, P&L or balance sheet. Sorry, P&L or OCI. So this is what, as an auditor, I'm supposed to check that whether their assertions are true or not. This is with regards to P&L. Then we also have certain assertions for statement of financial position. So you can have various assertions here. For example, uh, there can be an assertion related to, so this is REVAC, where R stands for that whatever is stated in the balance sheet, on that rights and obligations exist. So all the assets and liabilities, on assets we have rights and on liabilities we have obligations, right? Then we have existence, that whatever asset and liability is there in the balance sheet, that has actually existed, that actually exists, is real, right? Then what we have is valuation. The valuation of the asset and liability is correct. And then the accuracy is also there. That means the calculations have been right. See, valuation is the fair value of the asset or liability, and accuracy is that, like, you've calculated the carrying amount. So carrying amount is calculated as cost minus the depreciation and impairment. So that is accuracy. Whereas valuation is the value that you receive from the market. Then C stands for, again, you can say here completeness or classification, whatever suits you. So this is also our assertion. Now to check these assertions, the auditor, to check the management's assertion, conducts some work. He does some activity. So he can do various activities. Some keywords like uh, he reviews, he recalculates, you know, he analyze, observe, Uh, he sometimes do investigations, so investigate, inquire, inspect, obtain. So there's a lot of work that he does. So you can start your procedure with this verb, right? So you can make a good procedure that this is the work that he does, and then you can say that why is he doing that work. So basically, a good procedure would look like verb, the work that he does, okay, on which document or transaction is he doing that work, and which assertion is he testing or why is he doing that. This is a formula of making a good procedure. So for example, I want to check the accuracy of depreciation calculation. I always give you that example. Let's suppose the auditor wants to check the accuracy of the depreciation. So we can say recalculate the depreciation expense to assess or to verify its mathematical accuracy. Now that's a good audit procedure where I've given a verb, I've given the account balance which is being checked, and I've given the reason, that means to check the mathematical accuracy. So instead of writing the general word check, I wrote verify. That's how you add professionalism to your answers, right? Similarly, another you can say procedure. Let's suppose you want to check whether in the board meeting they have authorized the purchase of property, plant, and equipment or not. So what we will say, review the board minutes, the board minutes to verify the existence of authorization to buy, authorization to buy or to purchase the property, plant, and equipment. So you are supposed to answer it as per the case study. You can't mug these procedures up. They will happen as per the case study, as per the information given to us. But this is the technique that you can use to actually make a good procedure. Now, with procedures, there's another concept that is of evidence, right? So, what is there in evidence? Let's talk about question number 11. Evidence. See, evidence is once the procedure has been performed. Now, because in future you can be sued, you have to gather sufficient and appropriate audit evidence that you have performed work and what is the basis of your audit report. For that, you need sufficient and appropriate audit evidence, right? So, we need evidence. Evidence is basically a documentary form of the work that you have done. For example, you said recalculate the depreciation. Now you will say, what is your evidence that you did recalculation? Copy of recalculation uh, working papers for depreciation expense to ensure mathematical accuracy. So if tomorrow someone says that auditor, you did not check the depreciation correctly, I'll say, see, I have my own paper where I have recalculated the expense. I did my work. Now the things have come into light. Now that's a different thing, but I did my work properly. So it's like you are saying there's a documentary evidence. For example, if procedure was that physically go and inspect that whether the asset exists, what could be its related evidence? You did a physical inspection of machinery. So its evidence will be its photographic, picture. It's picture. So photographic evidence of the physical inspection that you have done. So you will go to the equipment, you will take a picture there, and that copy of picture is your evidence that yes, we went to the place, to the site, and we have actually legit seen that whether this machinery exists in the given condition or not. That is how we make the correct answers for evidence. So see, again, we've done very important part of our AAA. We've discussed about the NoCar, the fraud, the professional liability. Talked about business risk answers. We've discussed about ROMM and audit risk questions. We've discussed about procedures and evidence. Finally, we have the next topic of review and reporting. So, what goes into the audit report? What are different kinds of paragraphs which are added into the audit report? And then the other assignments. That's going to be our last step before we move on to the technical articles. So, again, we are going to take a short break of 5 to 7 minutes, and then we are going to resume with review and reporting. So, let's take a short break of 5 to 7 minutes and get back with review and reporting. Yes, guys, let's continue with the session. Please confirm in the chat box if I'm audible to you. Again. Yes, audible. Am I audible to you? Awesome. Okay, let's resume. Let's talk about review and reporting. See what goes into an audit report. You know the mnemonic, right? The question is what goes into the audit report. So the mnemonic is Taub Cora Read. Taub Cora Read. Now read is useless, so I'll just stick to Taub Cora. So here we basically have Taub means T means title. Title of the audit report. Then whom are you addressing this audit report to? So addressee, right? Then we have the okay. Then we have the opinion. Okay, so which opinion have you given? We'll talk about various opinions which exist. Then basis for opinion, that why have you given that particular opinion? Now, if your opinion is unmodified, so there will be no basis for opinion because unmodified means everything is true and fair. There is no material misstatement. So in that case, the audit report is unmodified. Now, then we have K stands for key audit matter, that is scam paragraph. Then O stands for other information paragraph. Then R stands for the responsibilities of the management, responsibilities of management. Then finally we have auditor's responsibility. So this is what we basically have in our um, audit report. So title and addressee is not something that I feel I should discuss with you. But let's talk about various kind of opinions. Before we get into the opinions, we need to understand certain terminology. That is, what do you mean by pervasive? See, you know what is material? Material, it can be either by nature or it can be about by PBT, by total assets, or it can be material by revenue. So either it's by nature or it's by the number. Then there is a term of pervasive. What do you mean by pervasive? When a misstatement, a mistake in the financial statement, which is widespread in the financial statements. So any misstatement which is widespread in financial statements, that means it's widespread means it's there in the whole financial statements. It's there in more than one accounts. So that is pervasive. Then any misstatement which is a significant portion, which is a significant portion of profit, revenue slash asset. So not just material, it's significant portion, like a misstatement which is 60% of the total profit. So that becomes pervasive misstatement. So it's like materiality to the next level. Then if there is any disclosure which is misstated, any disclosure which is fundamental to users' understanding, which is fundamental to users' understanding, okay, which is fundamental to users' understanding, that is also leading to a pervasive misstatement. So this is what I mean by misstatement. Okay, something which is widespread in the financial statements, which is a significant portion of profit, revenue, or asset, or which is something like a fundamental disclosure. Now, what are the types of opinions we have? One is qualified opinion. So qualified opinion is given when there is a material misstatement. So if you have a material misstatement in the given question, so you are going to give qualified audit opinion, right? So if there is a material misstatement, we are going to give qualified opinion. If there is a material and pervasive misstatement, if there is a material and pervasive misstatement, then I'm going to give adverse opinion. So if there is a material and pervasive misstatement, then I'm going to give adverse opinion. Then if I have like material misstatement, but I don't have proper evidence to back it. Like for example, there is a lack of availability of evidence. So sufficient evidence is unavailable. Maybe the papers were burned or they're not accessible, they are no more existent, the files are corrupted due to any reason. Then we give disclaimer of opinion. If there's lack of sufficient and appropriate audit evidence. Maybe there is evidence is unavailable due to any reason. That's when you give disclaimer of opinion. So these are the three kind of opinions that we have. Then what we have is, the we've discussed about the basis for opinion. So if your opinion changes to qualified opinion, then your basis for opinion paragraph will say basis for qualified opinion or basis for adverse opinion, basis for disclaimer of opinion, where you explain the reason why that opinion is given. You mention which IFRS is breached here or is misapplied here. Then what goes into CAM paragraph? Let's understand. Before we understand CAM paragraph, we need to understand what do you communicate to TCWG. So there is a report that is made where we communicate to TCWG, right? Those charged with governance, we communicate to them. So let's come to question number 13. That what do you communicate to TCWG? Communication with TCWG. So what do you communicate to TCWG? See, you communicate your auditor's responsibility. Once you are in the completion stage of the audit, you convey your responsibility. You convey at every given time the planned scope, timing, and direction of audit. So you keep the TCWG in touch with your process of audit. Then if there are any significant findings during the audit, okay, you communicate it to TCWG. If there is any internal control deficiency, okay, you communicate it to TCWG. If there is any recommendations with regards to the internal control deficiency, you even communicate that. Then you also communicate any ethical issues that auditor has faced during the process of audit to the TCWG, etc. Now, these are the stuff that you communicate to TCWG. Now, out of these things, whatever you've communicated to TCWG, there are certain very important things that you pick up and you call them as key audit matters. So what is CAM? Okay, what is the CAM paragraph? It is, you know, few issues, few issues which are considered, which are considered as highest risky areas of the client, highest risky areas of the client by the auditor are mentioned in the audit report as CAM, key audit matter. So basically, the most important significant findings of the audit, things that has happened during the audit, which are positive. Like I'm not saying positive in the sense that they're good things. Positive in the sense that they have not led to a material misstatement or modification of audit report. but they did happen, they did occur. It could be a good event or a bad event, right? So that is what we state in the CAM paragraph. Now, in the CAM paragraph, we tell them that what is CAM and why is it considered as CAM. So which issue is CAM? Why is it CAM and how did you deal with it? How was it dealt with? This is what you discuss in the CAM paragraph, right? Then you have another paragraph which goes into the audit report, that is emphasis of matter paragraph. What is emphasis of matter paragraph? So EOMP is a positive paragraph where you draw users' attention to something which was correctly disclosed in the financial statements, right? So it's a positive paragraph where the auditor draws the auditor draws the user's attention to correctly disclosed information or disclosures in the financial statements, right? So something which is correctly disclosed, you just draw users' attention to that. That okay, please have a look at it. You do not draw users' attention to material uncertainty regarding going concern paragraph in UMP, because for that you have a separate paragraph, that is MURGC. So where is EOMP placed? Emphasis of matter paragraph, where do you place it? You place it after CAM, right? So this is placed after CAM. Then you have MURGC paragraph, which is placed after, where do you place this MURGC paragraph? This is placed, yes, this is placed after basis for opinion. Let's understand what is there in MURGC paragraph. For that, we need to understand the going concern concept. So let's understand the going concern concept. So as per IFRS, if you are no more a going concern, see, if you are no more a going concern, you have to start making your financial statements on breakup value basis, right? That means every asset and liability will be recorded at net realizable value. But if there is uncertainty regarding going concern, these are two different things. One is that you are no more a going concern. Second is you are just uncertain that I might not be a going concern. So if there is uncertainty regarding going concern, then I am supposed to make a disclosure, right, in the financial statements that there is uncertainty regarding going concern. Now, if this is the accounting treatment, now if the financial or you can say the accountant has done for the first situation, that is when you're no more a going concern, there are two factors, that he has correctly accounted for it and he has not correctly accounted for it, the accountant. Now if the accountant has correctly accounted for the breakup value basis, right, then what I will do, I will say this is the correct treatment, so I will put it under EOMP paragraph. So wherever I would have disclosed that the financial statements are made as per breakup value basis, I will draw users' attention to that correctly disclosed disclosure. So I will just involve EOMP paragraph. But if it is not correctly accounted for, then it is an adverse opinion that I will issue, because all assets and liabilities should have been recorded at NRV and all of them are not included at NRV because you have not followed the breakup value basis. So this is a pervasive misstatement. Now, if there was an uncertainty regarding going concern, I should have given a disclosure. Now, there are two situations. You have given the correct disclosures or you have not given the correct disclosure. If you have given the correct disclosure, I will put it in MURGC paragraph, the one that I talked about above here. right? So I'll put it in MURGC paragraph where I'll just draw the user's attention to the correctly disclosed MURGC paragraph. If the disclosure is not given correctly, then this is a qualified opinion. This is a material misstatement. So I will give a qualified audit opinion and no paragraph, right? So this is what you need to understand for MURGC. Then there is one other matter paragraph, right? So what is there in other matter paragraph? Let's understand. So other matter paragraph is like UMP was related to financial statements. Other matter paragraph is any matter apart from financial statements. Other matter paragraph. It is para related to any matter apart from financial statements. So if there is any material misstatement in the financial statements, we disclose it in the opinion paragraph. But if there is any inconsistency in what management has said versus what CEO has said, what is chairman saying, what the previous auditor is saying, now that is a theoretical, it's like a gossip. Now that gossip is done in other matter paragraph, right, which is placed again after CAM. Then you have other information paragraph, this one, which is already there in the actual uh, format of audit report. Other information paragraph, okay. So any other information, okay. So there can be an ambiguity between other matter and other information. But other information is like you have some structure of your company, there's a governance, there is some press release. So any other information that you find material is put in this other information paragraph, maybe a future vision, something there on the website. Now if there is an inconsistency, so usually this other information paragraph come after CAM. But if there is a misstatement in this other information, if there is some mistake in the other information, then this para moves from after CAM to after basis for opinion para. So the para moves from after CAM to after basis for opinion paragraph. So if all the paragraphs are added into our friend's name, our friend's name is Taub Cora. This is the actual format of audit report. But if we add all paragraphs to it as per their placement, so after basis for opinion, we have MURGC, right? We also have other information here sometimes. Then here, emphasis of matter paragraph, other information paragraph. This becomes the name of a friend if there are modifications happening, right? So this is the stuff that goes into the audit report. Again, very important topic from the perspective of your, how do I say it? This is from the perspective of your question number 3, right? Now you have other assignments like due diligence, where you see whether the counterparty that you're planning to acquire is having real assets, you check their valuation. So in exam, they just ask you, for example, cash flow forecast. So they're just going to ask you procedures or evidences. Evidences they don't ask generally, procedures related to that particular assignment. So you will just use for other assignments basic procedures. Basic procedures like review, analyze, observe. You don't actually go on the field to do stuff. Okay. So here for other assignments, I'm not going to discuss that in detail with you. So that's very simple topic. Other assignments. Where we just basically have various other assignments. We don't know which question can be asked. It can be due diligence where you are actually trying to acquire a new company. It is all application based. In the given question, there will be a target company, and that company will have its assets and liabilities. You'll have to see whether the evaluation is correct, accuracy is there. So you'll have to perform procedures. There can be cash flow forecasts that you have to review. So you'll have to check the assumptions, that whatever assumptions and the growth rate that they've assumed is correct or not. So you will perform certain procedures. Then there can be something related to, for example, forensic investigation of fraud. So there again, you will have to perform investigation procedures to see who's the fraudster, what is the quantification of fraud. So these are all application based areas where procedures, the way of making procedures still remains the same, that you write the verb, the document, and the assertion, right? So there's nothing to discuss about these things theoretically. This was all application. Now comes the technical articles that I wanted to discuss with you. Number one is big data. Then we have sustainability. Okay. Uh, then what we have is our LCE. That is basically your, you know, the audit for less complex entities. So let us first discuss big data, and then we'll take a small break and get back with sustainable reporting and the LCE. So let's discuss about big data. Now see, this has become a little redundant topic, big data. You all know what is big data. That's similarly, like for example, every company, they have a lot of data, and we have a lot of unstructured data on our, in general, that's from where the algorithms pick up the data and they, show you ads. So if today you search for gifts, you will start seeing ads on Instagram related to gifts. So it's like this information, the companies and the brands are picking up from your big data only. So they analyze the big data and then they target the audience accordingly. Now, this big data is available with the auditor as well, right? And there are certain advantages which can be asked to you as direct question, that what are the advantages of having data analysis or big data. See, the first advantage is to the auditor that he can perform computer assisted audit techniques, right? So instead of doing sampling, he can use AI to actually conduct analytical procedures. So previously, we used to just, when we were doing it manually, we were doing it sampling basis. But now, since the whole data is available to us in computers, we can use AI, we can use data analysis software, and we can conduct analytical procedures. Instead of doing it manually, now a good software will give us a report, right? So this is advantage which is going to save our time. Yeah, right, this is going to save time, and this is going to help us find more material misstatements. So it will reduce the risk of material misstatement. So you might not, the risk is that you might not be able to detect all the material misstatements, so that detection risk will be reduced. It will reduce the human error. So sometimes, every analysis that we were doing by ourselves, that was like, we were just thinking up to some extent. But now, since the basic work is done by the AI or the software, we can move forward or steps forward from that. And this will save our time, and it will also save any mistake that our human mind could have done. Then this will help us give better conclusion. So now we can draw better conclusions and analysis. So these are the advantages of data analysis. Now, what are the disadvantages? Because you are starting to use the data analytical softwares. See, the disadvantages, what if the data is leaked? Leakage of data. That's the biggest disadvantage. So even today you're using ChatGPT or Gemini, you're giving your data, you're putting those pictures of yours, which you're converting into Ghibli art or into various new trends which are going on. So you end up giving your data to the third party softwares. So the biggest risk here is that what if our data is leaked or misused? Similarly, in audit also, what if our data is used? What if the data is manipulated, because if you have a software, you've coded and made a software, you can put up formula and you can manipulate the data also, and therefore you can manipulate the analysis also. Secondly, these softwares are also coming at a cost, so this will cost you. Fourthly, it can lead to no-clar. So these softwares can lead to non-compliance with laws and regulation, or there can be some laws and regulations which you can skip detecting through the softwares that you are using. So these are the disadvantages and the advantages of data analysis that can be asked as a direct question, one of the technical articles. Okay, I hope we are clear till here. Yes, makes sense. Okay. Yes, can be complex. So you can make as many points. These are all commonsensical points which we are making. Now we are just left with two topics, technical articles, which we will read properly. Okay, these are new additions to our syllabus, so we will read them properly. So we'll take a break of like 7 minutes, and then we will move to the exposure draft for sustainable reporting. Okay, where we'll talk about, because see, when sustainable reporting is introduced in SBR, now people are making sustainable reports as per IFRS S1 and S2. So we need auditors who can also audit those, reports. And then we have a technical article on a single auditing standard which is issued for less complex entities. So, what are less complex entities and how do you conduct audit on them? This is what we are going to consider after a short break of 10 minutes, and we shall resume with the above two technical articles. Right? So, let's have a short break and meet with the last two topics for the day. Yes, guys, I hope I'm audible again. Let's start with our last part of the series, the two technical articles. So here I am on the ACCA's website of technical articles for AAA. So we have two specifically added technical articles which were not there before. Okay, so let's have a look at them. So, audit of less complex entities, that's what we are going to cover in this last part of the video. And then we are going to cover the audit of sustainable reporting. Okay, so sustainability assurance, the proposed exposure draft of 5,000. So, that's what we are going to discuss. So, let's first discuss the LCE, audit of less complex entities. Honestly, this particular technical article, even though it might seem a lot of that yes, this is very hefty or it's very bulky, but actually it is not. So, nothing to worry about. Okay. So, what we have here is quite easy. So, I want all of yours attention. Just drop a yes in the chat box that you're with me in the session so that we can have a good discussion over it. So let's see, what do you have here? Okay. So this article focuses on the guidance available to the auditor when carrying out an audit of engagement in relation to a less complex entity. Now, what do you mean by a less complex entity? See, if I talk about an listed company, that will obviously not be a less complex entity, right? Listed company is something which is very having a public interest. So I can't say that is a less complex entity. So what we have is that following an extensive consultation process, the IAASP, that is the board which issues ISAs, has issued ISA for less complex entities, which is a standalone auditing standard which contains all necessary requirements to allow the auditor to obtain reasonable assurance that the financial statements of LCE are free from material statement. So what I will do is I will first, I would first copy this part of this paragraph because that should go into my notes. So in my Word file, when I'm going to talk about LCE, let's make a short note out of the technical articles, right? So this will help you just revise the important parts of the technical article before the exam. So let's just paste this here. So what is this ISA? It's a stand-alone. That means only this auditing standard is going to be applicable on less complex entities because this will help us give reasonable assurance that the financial statements of a less complex entity is free from material misstatement. So standalone means only this standard will be applicable. So that means the work of the auditor is saved to refer to various auditing standards that we have. So in less complex entities, we'll spend less time, less energy to audit because we will just have one standard to refer to and not a full class of standards. Now, purpose and objectives for this ISA. Now, IASSB stated that ISA for LCE was developed to provide a global solution to the concern about length, complexity, and understandability of ISAs and their application to audit the LCEs. So, this is quite natural. Okay, I'm not giving attention to this paragraph because they're saying we introduced this ISA because the previous ISAs were too complex, too vast, too theoretical for smaller companies to follow. So we made a simplified standard for smaller companies. Makes sense. Some of the main objectives of the new standard are that this is proportionate and tailored. While it is based on the principles and objectives set out in the main ISAs, the main aim of ISA for LCE is to provide a standard that is proportionate and tailored to the audit of smaller companies. The IASSB has stated that the ISA for LCE has been designed to ensure that the audit procedures to be carried out are appropriate for the size and complexity of the entity under the audit. The standard provides practical guidance to demonstrate how audit procedures can be applied in a less complex environment. So we did not remember the explanation, but when we are talking about something as an overview, what is the objective? What is the objective of ISA for LCE? The first objective is that this particular ISA is proportionate and tailored. That means it suits the size of small entities. It is less complex and it suits the size of the less complex entities. Then we have emphasis on a risk based approach. So, what is a risk based approach? See, it continues to emphasize on risk-based approach. This ensures that an auditor working on smaller entities is still able to focus on areas which are at the most risk of material misstatement. So in general also guys, I don't think this is different from general ISAs. When you're talking about audit risk, you do the risk-based approach only. You find the audit risk, you develop a response to it, and then you develop procedures around it, then you collect evidence around it, and then you give your report. So that's what they're saying, that we will here also focus on risk. So auditors are required to use their professional judgment when applying a relevant audit approach to the engagement. This focus on key risk allows for more targeted procedures and should result in audit being less burdensome on entities which lack extensive resources for a larger company. Now, this is a paragraph that I can actually copy and remember, that when I say risk based approach, you know, this is what we can actually memorize from this particular point, that what do you mean by risk based approach? This focus on key risk allows for more targeted procedures because you're just focusing on risky areas. So, of course, you will have targeted procedures, and should also result in the audit being less burdensome on entities which lack extensive resources for a large company. So this is the whole objective of this ISA, right? That we need to reduce the work of the auditor for smaller companies or smaller clients. So we are following a risk-based approach. We are not doing like audit of everything. We're just doing audit of things which are risky. Okay. Next is audit documentation requirements. So due to extensive documentation requirements which are set out in main ISAs, another driver for standard was the aim of reducing administrative burden on auditors while ensuring that sufficient and appropriate audit evidence is still obtained on which to provide opinion. So our objective is also that, when we are making this ISA, our objective is also that there is less documentation, because the auditor has a lot of burden to maintain or enhance documentation of everything. So here he will make less documentation, even though he will still obtain sufficient and appropriate audit evidence, but not that extensive documentation. So these were the three purpose and objectives. That is, it is proportionate and tailored. Its emphasis is on risk-based approach, and the audit documentation is reduced. Okay. When the ISA of or LCE can be used. So decisions about the required or permitted use of the ISA for LCE is by individual jurisdictions. So can you use this ISA or not depends upon that particular jurisdiction of the client. The ISA for LCE should only be used once it has been formally adopted and the scope of it is being confirmed by the relevant regulatory authority or standard setting authority. The standard does provide specific guidance on which engagements the ISA for LCE may not be applied. Now, this is a very important application based part of the technical article, that what do you mean by a LCE? What do you mean by a less complex entity? When can you apply this ISA. So this is a very important and the most important part of the technical article, because again, this is a new article. They won't ask you much out of it, but kind of direct question. So when can ISA for LCE be used? When can you actually use it? See, we can use it as the paragraph suggests, that you can only use it if it is allowed in the individual jurisdiction. So ISA should only be used once it is formally adopted, the scope of its use is confirmed by the relevant authority and standard setting authority. So this is what I'll directly copy, that's when I should use it. Now, what are the situations when I cannot use LCE? What are the big no-nos? Number one, there are specific prohibitions. What? A listed entity can't use this ISA, as I said, because that's a public interest entity. An entity which is public interest, such as financial institution or a bank or something like that, they can't use it. A group where any of the group companies fall into two categories uh, listed above, or where component auditors are involved. So if there is a group and anyone, either parent or subsidiary is listed, and component auditors are involved. The only exception here is when the component auditor's involvement is limited to circumstance in which a physical presence is needed for a specific audit procedure for the group audit, such as attending inventory count. So what does this mean? The only exception here is when the component auditor's involvement is limited to circumstances. That means component auditor is not physically helping us. He's not attending inventory counts. He's not visiting. He just exists. So if the component auditor is non-existent, then you can say that maybe, okay, this is a LCE, otherwise it is not. So what are the situations which are big no's? Um, Situations where ISA for LCE cannot be applied. What are these situations? If the company is listed, if it is public interest, like a financial institution or so, if it is a group with any one member of group being listed or public interest, okay, or component auditors are involved. But if the role of component auditor is limited, that means, for example, he's not doing any physical work, then it can be used. Then you can use ISA for LCE. That's only one exception for this component auditor part. So these are the situations where, or these are the companies which cannot be called as less complex entities. Then what are the characteristics of less complex entities? How do I know that this is a less complex entity? I will know it through its industry, business activity, and model. So it will be a small entity which has a very simple business model, okay, which has less kind of regulations on it. Its organizational size and structure is very simple, right? So entity structure should be straightforward and minimal. There should be less number of individuals in the management. Ownership structure should be simple, not complex. Nature of the finance function. The entity should have a centralized finance function and few employees in the financial reporting process. IT. An LCE should have a simple IT process, likely to use off-the-shelf IT software like, QuickBooks and so. Financial reporting framework. The entity's financial statements will require limited management judgment. So there will be very less risky areas. So there will be less management judgment. So these are characteristics of a LCE. So what are the characteristics of LCE? We can get to know about that this company is an LCE by looking at its industry, business model, which should be simple, by looking at its regulations, which should be very simple, no high regulations, by looking at its organizational structure. I can look at its ownership structure. I can look at its IT. I can look at its, what do you have apart from that? Nature of finance function and financial reporting. So, nature of finance function and financial reporting. So, these are the things that you should remember. Whatever I'm typing in the notes, this is what you will read and remember. You understand, right? That these should be simple, simplistic, not complex. That's when I can say this is an LCE. Okay. Next, quantitative thresholds. The ISA for LCE suggests that each relevant jurisdiction should also determine appropriate quantitative thresholds, such as revenue, assets, or employee numbers, to determine which entity for ISA for LCE can be used. Now, that is something which is a guidance to the government, that please make such quantitative thresholds for your jurisdiction. So, that does not apply to us. We are not going to take care of that, right? So, this is what we have to take into account while deciding that which company is an LCE. Now, this is something that can be asked to you, that, okay, whether it's an LCE or not. Now, what are the benefits of using LCE? Now, this is something which can be asked directly to you as a direct question, because they don't have much to ask. So this is something which they have given by themselves. But I think you can make the benefits yourself also. Why do you want to do it from their perspective? See, first is simplification of audit and documentation requirements. Of course, many things are very extensive in the ISAs, things are very complex, but if we follow the simplified standard, our audit process time will be reduced, because very many small companies, they hesitate from getting audited because they think this is very hefty or a hectic job where I have to spend lots of money and time and energy. So by having this standard, we are saving our time and auditors' time, and the companies will be happy to get audited quickly. So that is a good win-win situation for auditors and companies as well. Right? Standard is scalable and proportionate, efficiency and accessibility, quality assurance, confidence in financial reporting. So I would suggest you that if you could read this, but I'm not saying that you should directly remember this, because this is something that you can make by yourself, that what are the advantages of ISA for LCE. So basically, if I have to just jot few down from my own head, I would say it saves time, it saves cost, it will make things simplified, it's a motivation for smaller companies to get audited. So if they will get audited, it will be increasing the trust of the investors, right? And then we can say that this will make the auditor's job easy. Auditor's job will become easy, right? So this will be our advantages for ISA for LCE. That's it. So this is the technical article on LCE, and the most important part of this technical article is that what an LCE is. So here you can be asked on an application based question, where in a case study they might be applying this standard on on a public listed entity or a public interest entity. So you will say this is wrong, because LCE can only be if these conditions are met. So this is not an LCE. This is the actual meaning of LCE. So this is the most important part of your technical article, right? Are we guys clear on this? ISA for LCE. Just have a reading of this note. I'll be sharing this Word file with you post the class in the description box. So you'll just read the notes and that would be sufficient. Still, if you are very ambitious and you have time, you can read the technical article. Otherwise, this is sufficient for your revision. Are we all sorted? Easy peasy? Okay. Let's come on to the last technical article. which is important, is basically on sustainable assurance. Okay. See, you all must go through my IFRS S1 and S2 video of SBR. It's available on YouTube. You just search IFRS S1 and S2, you'll find it on my channel, right? Now, what do you have in this sustainability assurance? See, as I said, that you know we are entering into a phase where sustainable reporting is becoming rule. It's becoming, like a requirement that you have to have sustainable reporting being done, right? So now, if I give you the notes of it, like general, I'll give you a general understanding, and then you can read through the technical article. See, this is an exposure draft. At this stage, this is still an exposure draft. So we are talking about sustainability assurance. So basically, if you are doing sustainable reporting, we need someone to read those reports and give us assurance that those sustainable reports are true and fair or not. That is what we mean by sustainability assurance. And to deal with this sustainability assurance, we have an exposure draft, which is a current issue, which is ISSA 5000. So this is you can say it is like a proposed standard. Now, what is the objective of this standard? What is the objective of this exposure draft? The objective is simply to see if the sustainable report is true and fair, just like the objective of audit is to see if the financial statements are true and fair or not. So, the objective of this is to check if sustainable reports are true and fair or not. That's what we are checking, right? Now, uh, what kind of assurance can you give here? There are two kinds of assurances that we generally give. One is reasonable assurance that we give in audit, and other is limited assurance. So now it's very difficult to give reasonable assurance for sustainable reports. So the statement is that it is difficult to give reasonable assurance for sustainable reports. Why is it difficult? Question is, why is it difficult? Because see, sustainable report is prepared from various perspectives. Perspectives like what is your natural capital? Like how are you or how is entity impacting nature? Okay, how are you impacting human resource? How are you impacting the what is your footprint, environmental footprint? Uh, so there are lots of stuff. How are you creating jobs? How are you creating value to the society? Right? How are you using the resources appropriately? The environmental resources appropriately? How are you controlling the pollution? Right? What are your pollution control measures? Controlling the pollution. What is your impact on climate change? So these are the things that we are referring into in the sustainable report. Now, these are all qualitative factors. These are all ambiguous factors, right? These are all ambiguous factors, or these are all gray areas. So it is very difficult to give reasonable assurance on these gray areas. Some people, they can enter into greenwashing. You know what is greenwashing? Where people can actually fake things, right? Because they want to paint their picture as if they are very environmental friendly. So it's very difficult for the auditor to identify that whether they are lying or whether they are being truthful. So it's very difficult to give reasonable assurance. So in most of the cases, we will give limited assurance. So we'll just review things. That's what it is possible. Now, when we are making materiality of sustainable report, see, materiality in actual, it's by nature or it's by number. Now, when we are talking about sustainable reports, there are very less numbers there. So we have the concept of double materiality here. So double materiality means something which is material to the organization. So we see how is this matter material to the organization and how is this matter material to the outside world. So we see from two lenses how it matters to you and how it would impact others. So then we see whether it is material or not. So its planning is risky because when you're doing planning of this particular engagement where you're supposed to see whether the sustainable report is true and fair or not, it's very risky to find, or you can say it's very difficult to find risky areas, because I think every area would be risky here because it's a very new concept. So it's a very new concept. So even auditors, they are less experienced in this regard. So, we might need some NGO experts uh, in addition to the auditors who will help us do the audit of sustainable reports. So we might need some environmentalists, right? Because auditor will be very less knowledgeable about the pollution control, climate change, and stuff like that. So we might need environmentalists at this stage. So maybe in future we will introduce these modules in our syllabus of ACCA or CA, and now then the accountants will also be aware about these things. But right now the NGO experts and environmentalists will be required as auditor expert, right? Then we will have to gather evidence. Now, when collecting the evidence, it will be again difficult for us because this will be very subjective. The evidences will be subjective and will have a lot of judgment involved, because again, this whole area of sustainable report is such a gray area. So to see whether people are lying or are truthful will become very difficult for us. So it will be very difficult to obtain sufficient and appropriate audit evidence as well. There will be a lot of risk of fraud where the companies will be, greenwashing themselves. So there's a possibility that auditor can also collude with them. And there will also be a self interest for the auditor, because, it's just like, let's suppose, um, for example, I am not aware about environment. Okay, I've not studied the module of environment. But let's suppose a new module is introduced in ACCA which is related to environment. And as a tutor of ACCA, let's suppose I want to take that opportunity under my self interest and I start teaching that module also. Now, I don't know that module. I have not passed that module. I have not studied that module. I have not been teaching that module. But out of self interest, I pick up that paper. Same can happen with the auditor. He does not know sustainable reports, he just knows financial statements. But now, because sustainable reports are there, he's been auditing financial statements only since so many years. But because now sustainable reports are getting prepared, so he'll be like, okay, let me just optimize this situation. And he will enter into this with very less experience. So this is a self-interest for auditor, right? So there can be a lot of manipulation involved in this particular field. So if you will read this particular technical article, I've given you the crux points. This is basically what you will find here, right? So let's just have a quick reading. See, what is sustainability? What is the context of sustainability? So here we include so many things: climate, energy, water, biodiversity, labor practices, human rights, etc. Now, we are, what is the objective of this ISA? To give reasonable assurance or limited assurance, to communicate further by this ISA and any other relevant ISA, to express a conclusion on sustainable information. So basically, to give a assurance, all in all, to give an assurance whether sustainable report is true and fair or not. Now, when should you accept this engagement? See, you should only accept this engagement if you understand the scope of work, you know which information is reported, you know to whom it is reported, what is the suitable criteria, and what kind of assurance is required. And do you have the knowledge, training, and experience or not? This is what you will consider. Planning the engagement, you will see what is being reported in the sustainable report, how it is being reported, and understand the relevant internal control. This is quite basic to basic audit process also, so nothing different. Materiality. So what I taught you was double materiality, right? So here double materiality is given to you. This means consideration of significance of the impact to the organization as well as outside world, impact materiality. So we are considering double materiality in this situation. Then obtaining evidence, in this whole paragraph they've given you that obtaining evidence in this case is very difficult because it's a gray area and auditor also lacks information. It's very difficult because it's based on judgment and it's subjective. Then reporting, see, uh, reporting, they have stated that giving reasonable assurance is difficult, so most of the times we should give limited assurance. Then greenwashing, I've discussed with you that many people try to greenwash their sustainable reports, right? And they end up overstating their contributions to environment, or they end up overstating their visions and targets. So that is kind of difficult. Then ethical angle here. See, here there can be self-interest threat, as I discussed. There can also be self-review threat because you are doing the audit of financial statements and sustainable report both. That's it. So all in all, what I've given you here in the word file is the crux of the whole technical article. But again, you can give a small reading to the technical article if you want without any stress of mugging it up. Just a reading to understand. Because what you have to mug up, I've written here in the word file. Right? So this was our standard on sustainable assurance and our ISA for LCE. And we have discussed almost every theoretical area of our AAA exam. Right? So this was the last address that I wanted to do with my students of AAA. So this was the AAA Grand Revision for December 2025, and I will be sharing this Word document with you after the session in the description box. If you enjoyed the session, if this helped you in any way, please do hit the subscribe and the like option and share it with the friends who are preparing for this exam so that they can also take the advantage of this resource. Apart from that, my guidance for the remaining days, guys, this is might be my last address to you. So my guidance for the last days that are left, see, 2 days before exam, you should focus on your notes only. Okay, you'll just read the theory, you will read the full notes, okay, if possible read the full notes, nothing else. Like quickly go through them. You've already read them so many times, so you'll read it one last time. It will take less time. Uh, then before that, make sure you have done AAA's pre-mock by ACCA. So you can solve that pre-mock and then you can actually watch the debrief by ACCA. That's like something that you have to do short, right? Then apart from that, I think grand revision, this grand revision, if you have skipped in between, just complete this grand revision, go through the two technical articles that I've told you, and that would be sufficient. So these are the things that I would guide you that, okay, this is what you can do in the remaining days. And nothing apart from that, because I hope you have done the apt practice. So someone would have done the whole kit, someone would have done 80%, 70%, 60%, 50% of the kit. Whatever we've done, if we have done few questions from every area, it is sufficient. You must have given one mock, okay? You should have written at least one mock. That's very important in the time pressure environment, right? You should have given it in the time pressure environment. So, what matters in AAA is just that you write calmly, you write in professional words, you write in paragraphs, you give headings. You are not too basic, you are giving in depth answers, you're writing exhaustively, and you're referring to correct IFRSs and ISAs. And if you want to revise the IFRS, yesterday the SBR Grand Revision was conducted. So you can watch the Grand Revision of SBR on the live section tab of my YouTube channel. Okay, so that's it. So I hope it was a helpful session for all of you. I tried my best to make it as easy for you as possible. And I'll be sharing this word file again in the description box. And the video will be uploaded on YouTube if you want to refer back to the recording of the live class that just happened. So thank you so much, guys, for your time today. And I am sending my virtual digital wishes to each one of you who survived till the end. That may God bless you all and may you pass with flying colors. Please maintain your calmness, your common sense before the exam. Do not listen to your brain, which gets scary sometimes, where it tries to divert you, creates anxiety, thoughts, fears. Just avoid it, okay? Don't try to get into that trap of your mind, okay? Just try to counsel yourself that this is not the end of the world, and he's trying to manipulate us. The brain tries to manipulate us by playing doubt games, fear games. When you're sitting in the paper, it will tell you that this paper is very difficult, it is getting out of hands, time is running. We will just focus on our we say karma, okay? That's basically you just focus on your work. You are doing the exam, that's your ultimate job. Whatever happens, whatever is the outcome, we'll see that later. Leave that onto God, right? So this is it for today, and that's it, guys. Thank you so much. Okay, uh mock debrief. It's The mock debrief is not like given completely, um you know like in a one video, but the mock that I've taken, not the ACCA one, but the one my students have given, the questions one by one are debriefed in the kit question debrief section. So you can watch each question separately there. So that's it. Thank you once again. All the very best. And I would suggest read as many answers of the questions as possible rather than watching videos of those questions. So that's it. Goodbye. Take care. Bye bye. And thank you once again. Good night.